focus in on today's debut, and that was Sandhar Technologies. Quite a decent debut for the stock in trade today, and it listed at a level today of about 346, a 4% premium to the issue price of 332. Jayant Davar, who is the co-chairman and managing director of Sandhar Technologies, now joins in to talk more about the prospects. And congratulations on the D Street debut. Let's begin by talking about the kind of response that you garnered. It was fairly decent, but are you satisfied?
Well, one was a little anxious, keeping in mind the volatility of the markets. But I guess the message that we tried to convey to the prospective investors went in well, and we seem satisfied at this time.
Great. How much of this fresh infusion, the money that you've raised from the IPO, will flow into your books, and how do you plan to use the proceeds going ahead?
Well, the fresh issue will bring in 300 crores into the company, and we currently have an overall debt of about 500 crores, out of which 250 is for working capital. Some of this working capital, or most of it in a sense, is for our overseas operations. While we will retain that because it comes at a cheaper rate of interest, but the term loan, which is about 250, will be completely extinguished by the proceeds that we get in.
Now, your revenues have grown at a CAGR of about 9% over the last 4 to 5 years, and margins at a CAGR of close to 8%, which is quite low if you compare it to some of your other peers like FIEM Industries or Minda. Can you, tell us whether you're planning to scale up your sales and profitability going ahead, and what exactly is going to be the key trigger for this kind of growth?
Well, the last 5 years was kind of investment phase for us, where we invested about 650 odd crores into the business, and they were all directed towards the future technologies that were anticipated and expected, especially in terms of government mandates and norms, whether they be safety norms or emission norms. You're aware of Euro 6 norms which plug in from 1st of April 2020. We wanted to take that as an opportunity, and we invested. We invested money in auto electronics. We are aware of 2019 mandates, whether they be rear parking sensors or otherwise. Now that the investment phase is over, a lot of the margins that were under stress on account of these investments going in, and a lot of capital expenditures do get affected onto the revenue side. The first 6 months itself of the financial year 2018, we've seen margins go up by 120 basis points, with the revenue clocking by more than 22%. We expect that this is the beginning of that growth momentum, and with the investments now getting onto the revenue phase, we expect things to move much faster.
That's good to know. But the market is also talking about the fact that you're looking to further diversify your offerings. Tell us a bit more about the kind of segments that you're looking at in terms of future expansion. How do you plan to translate the strong demand in numbers, especially this fiscal onward, now that you're a listed company? What are the kind of plans that you have to boost growth across segments going ahead?
Well, I mentioned a few. So if you were to take one, for instance, which is fuel pumps, you're aware that all 30 million vehicles on the road will have to concur to the new emission norms, which means that all of them would need new fuel pumps. Now that market itself is huge, so that one product line, there could be several other people in the industry who are striving to go there or be there. But to each one of these new players, there's a huge opportunity which will bring in a huge amount of revenue added to their top lines. So also for several of the other products, whether they be safety mandates or they could be on account of customer preference, comforts, and so on and so forth. At this point of time, you're aware the auto industry is doing well. The government has been very proactive in bringing out reforms. Their focus on the rural sectors, the agricultural sectors, infrastructure. Sandhar plays into all of these areas, whether they be commercial vehicles or off-road or construction equipment, two-wheelers, motorcycles, tractors, So at this point of time, everything does seem to be on the right path.
Now, finally, you have a high dependence on the two-wheeler segment, which contributes almost 58% of your revenues, and your top 5 customers have about 70% of your overall revenues. That's another factor which seems to be a bit worrying for market participants. Do you think that we can see a revenue mix change given the increased focus on some of the other segments and your talks about expanding the customer base?
Well, to be honest with you, we're very agnostic on where the revenue comes from. We build ourselves towards technologies. Sometimes those technologies go across the auto sector, which means some of them are applicable to whether it's two-wheelers, three-wheelers, four-wheelers, tractors, commercial vehicles, whatever. And in some cases, it depends on the opportunity. So when we started out 30 years ago, we were only supplying to two-wheelers. Today, we have a diversified platform. Of course, two-wheelers still remains the largest. And that also comes from the scenario that the volumes are much higher in the two-wheeler space. So if I gave you examples of, let's say, a fuel pump, the fuel pump costing would not be that different for four-wheelers and two-wheelers, but two-wheelers obviously would bring us a higher revenue because of sheer volumes. So we are agnostic in that sense. We are not saying we are not diversifying. We are in all these categories. But at this point of time, yes, as things stand, we are more into two-wheelers than in the other spaces.
Great. Mr. Dawar, was lovely chatting with you and to getting to know what the company is planning for its future growth in time to come.